We're tracking Nvidia shares this morning. NVDA, the ticker symbol up on your screen right there. The shares are moving to the upside today after leading the declines in the Magnificent Seven yesterday, Monday, with those stocks shedding over $650 billion amid a steep global sell-off. The stock's volatile run over the last month here is leaving investors wondering if now is the time to buy. Let's bring in Patrick Moorhead, the founder and CEO of Moor Insights Strategy, joining us now here. All right, so Patrick, is now the time to, if you're not already involved in some form or another and have exposure to Nvidia, is now the time?
Listen, giant sell-offs are always a huge opportunities for investors. When I stand back and when I look at the PE ratio, it's reasonable when you consider the growth rates. Their midterm competitive position hasn't changed from anything. And when I look at short term, there is a little bit of risk here with this potential Blackwell push, which is the follow-on to their H series. But customers can still continue to buy the H series. So even on the short-term risk, I don't see a tremendous amount of downside here.
So Patrick, I'm curious on what you attribute just the volatility to. It sounds like it's a bit of an overreaction. It sounds like you think that any sort of hiccup here, if we do see that in production, is going to be more of a short-term blip. Was this just a stock, just given the massive run-up that we've seen, which is primed and positioned here for this type of pullback, and then therefore, kind of going to your thesis of what you just said, it maybe does present a buying opportunity then for investors?
Yeah, you nailed it. I think on one of your previous shows, I even used the word hiccup. Investors, that this stock was so hot for so long that any type of hiccup or bad news could mean a sell-off. And you add to what happened over in Japan and some other risks that melted the entire market. But you have to stand back and look at the overall short, midterm, and long, and then align whatever investment strategy you have with those opportunities and risks. I don't see anything changing in the data center for Nvidia for the next 12, maybe even 18 months. There is a little bit of short-term volatility until we understand what exactly is happening with Blackwell, which, by the way, could be an opportunity for AMD short-term, Broadcom, and maybe even Marvell to go in and grab some share. But that's a short-term, not a midterm, and then long-term, right? It's a totally different conversation.
It seems like some of the market's focus is going to shift towards China's economic data that's coming out this week. And the reason why I bring this up is this is going to be a pretense, perhaps, for the Nvidia earnings once they finally do report, given the significance of that region and continuing to tap into being able to put a specific chip for China made for that region into Asia Pacific as well here. What do you expect the reality of the pulse as prescribed via Nvidia to be about China and that market?
Well, it's kind of good news, bad news. The bad news was that earlier there were big restrictions and currently restrictions on companies like Nvidia, AMD, and Intel. And when you step back, because they're not participating, irrespective of what's going on with the China economy, it doesn't impact Nvidia a lot. I think the biggest thing that could impact Nvidia in regards to China is for the government to lock down on hyperscaler access, which has Nvidia GPUs in it, to China. Currently, Chinese companies can utilize US and Europe-based hyperscaler infrastructure as a service partners that have GPUs. I do think it would be an upside if Nvidia were to get government approval on this new tuned down version of their latest chips. So I think regardless of what comes out economically on China, if Nvidia gets the green light, it's good news.
Patrick, do you think that the narrative has at all changed surrounding the AI story? Has some of that shine maybe worn off. I'm curious just how you're looking at the development, specifically even really what we've seen over the last 2 or 3 trading days, and just, I guess, put that in better perspective maybe for some of our viewers.
Yeah, so I really see three major buckets for AI plays. The first one is this infrastructure. Anybody who is related to building out these massive data centers with GPUs in them, I think I'm very confident next 12 to 18 months that's going to be the case. And we saw the capital expenditure commitments by Microsoft and Meta and Amazon. It is absolutely pedal to the metal on that. And then there's the longer term downstream, right? The enterprise software providers that there has to be benefit in a large scale for all this to interconnect, because there is just factually an overinvestment in the capability versus the downstream benefits at this point. And if that gear doesn't connect in, let's say, 12 months, what's going to happen is the investors of these enterprise software companies are going to be asking, where's the benefit, and have super pressure on these companies to start scaling back. And that is when all bets are off. And the final thing I want to add is I still think there's this untapped opportunity, which is the AI PC and AI smartphones. So we saw a little bit on the AI smartphones related to Apple. We saw a slight bump on that. But when you consider there's only one generation of Apple smartphones that can do all the AI tricks out there, and then people are going to have to buy new smartphones, new tablets, and even new Macs. That's really, I think, good news for companies like Apple and Qualcomm and even AMD and Intel.
All right, Patrick Moorhead, always great to get your insight. Thanks so much for joining us here this morning.
Thanks.
Founder and CEO of Moor Insights and Strategy.